Thank you for coming. My name is Tim Clark. I'm the CEO of Fury Gold Mines. I just wanted to say I like Landman too. It's an awesome show if you want to take a look. But we're a little different business, but the idea behind what Fury's trying to do is be best in class of where we are, which is junior exploration. And the focus or the reason why I came here was because I really liked the setup of the company. It had multiple assets. They're all in Canada. There was a pathway for me to see the financing behind it. And right now we trade around 80 million market cap. We've got 4 million in cash, another 2 or 3 million in cash and cash equivalents, and we've got about $50 million of stock in Dolly Varden Silver, which makes us, I think, one of the arguably best financed juniors in the space. With that in mind, that's kind of a good starting point, really sort of to outline where we are. When I first got going with Fury, I spent 25 years in the capital markets industry, and I called up a couple of individuals that I wanted to ask for their opinion about what I should do here when I was offered the CEO job, and that was Steve Calhoun at Fidelity and Sean Boyd at Agnico. And I showed him this picture, and this is all it kind of took. We have big properties next to big companies. There's argument for big consolidation in Canada, especially in the junior space right now, with the gold price having lifted over $1,000 since I've been here. There's the large cap producers are kicking off a lot of cash. Mid caps have done well, development companies have done well, but there's been a lack of investing or catch up with the juniors, and that creates the opportunity that these guys were just talking about a minute ago. But when you think about how you look at these things from an investment point of view, obviously you want to have a good mine and good access, but when you're sitting next to big projects with big companies, that's sort of the logical way to go. And for me, this was kind of an easy trade. But in the beginning, we needed to get finance. So what we decided to do is focus in on Quebec. We do have a large property up in Nunavut, 300-kilometer greenstone belt with 1.3 million ounces. But we decided to sell Homestake Ridge, which was in BC next to Dolly Varden. We are very supportive of the company. We like what they do, and we felt that they could focus on that area. At the same time, putting those properties together gained a lot of interest in Hecla, and they've since come in 5, 10, 15% into the company. But it's given us, again, an opportunity to let someone else be great at what they do, which is in BC, and let us leverage off the equity of that property and that financing. And so when we go to the market to raise money, we're not desperate. We're not sitting at zero or a couple $1 million. We can take our time and we can ask for the terms that we want, and we've been pretty successful at that. And at the same time, it's been able to fund some of our SG&A and keep dilution down, which I think a lot of these companies get away from them. We are only sitting around 150 million shares outstanding. That's small for this group. Our dilution per year has been around 3%, which is, again, very small for the group. And I sort of turn back to my capital markets day is you don't want to dilute investors, and that's been a big focus. So we've highlighted saving costs. We don't have an office. I work from home on a cell phone and a laptop as well as everybody in the company. We don't travel business class. We don't spend a lot of money on hotels and big expenses. We put the money in the ground. And when I went out and asked for money from my past life and investors and family, it's a lot easier to look them in the eye when you know that you're doing these kinds of things, and it's the right way to run a company and the right way to be best in class, in my view. This is the slide I kind of like the most. It kind of says a lot about the area. James Bay is unique in the fact that they've got the James Bay hydro project, and as Agnico pointed out to me, that when we look for power, it's not electric power access, it's hydroelectric power access. And that's very keen for a lot of these producers because of obviously the ESG concerns. But more importantly, it's got roads too, and we've got access right to our property line. If you look down at the sort of the left corner there, you'll see this electric spillway. You have to drive over that to get into our property, and our resource is 2 miles up a dirt road. You can drive an 18-wheeler right to there. This is where we would get access to power once we get to the point where this mine is going to get built. And that's a huge first mover advantage that I think, again, investors tend to focus on grade and big bonanza discoveries, but business is a lot about just margins. And we are attracting a lot more companies than we were 3 years ago. And we've signed more CAs in the last 6 months than we have in the previous 3 years. And we're getting our resource up to the point where it's starting to gain some traction. These big companies, there's not big mines out there anymore. And they're going to have to figure out a way to make the smaller mines work. And the way that you make them work is to be efficient, and you have low infrastructure costs right out the get-go. The other part about this slide that's interesting is we used to be part of a three-way JV with on Eleanor South, which was just below the purple area, which was the Eleanor mine owned by Newmont. They have since announced their sale to Del Mar, which is an Indonesian group, for $800 million. But the last few years, we've liked this property a lot. My geologist told me that this is the area that they want to be drilling. And when you're working with 3 companies, it's not so easy to get organized and agree on anything. So nothing got done for a decade. No drilling on the high prospective areas that we wanted to be in. And we closed the deal last spring, and we started drilling on the northeast corner up near Sirios to see what was there. But our big focus is really an anomaly that's over close to the Eleanor mine, and this was mist, and it was kind of a boggy area, and I'll talk about it a little bit later. But it's where we're starting to drill in about a week. We've already got a camp open up there. They went in through snowmobiles to get started. We've got $2.5 million of flow, and it's probably the biggest prospective swing we've had in the last 3 years since I've been here, and it's potential for big discovery because if the signature anomaly, it looks very similar to the one at Eleanor, same scale and size, and if you think about what Del Mar is going to have to do with their mine, their mill is running half capacity and they need more feed. This could be a very logical acquisition for them, or at least an agreement of some kind. So going forward, my view is gold's going higher and consolidation is going to improve. The Fury, Eau Claire mine to the south, we got 1.9 million ounces. There's a winter road that can take it right up there, or you could drive it all the way around, because it's going to, again, need some feed. Or you can set up a separate mill right down there. But we're probably the highest grade, most ounces, where I know we are, in the area. So, case in point. This is the Eau Claire area that we own. Eau Claire itself, the resource is the bottom left in red. And when I got here, there was no other red on the rest of the page because there really was no work done. It's a 30-kilometer canard deformation zone that runs on the southern side of the property. It goes for 100 kilometers. And we've been out looking and exploring and spending some money over the last few years to try and create a pipeline for us. Percival was a project that was found in 2018. Someone kicked over a rock. It was 18 grams. The company didn't pursue it enough. We've added 200,000 ounces as a maiden resource to Eau Claire in the last year. But more importantly, when we sit down with companies that are looking at this on a regular basis, they're like, we like what you're doing in Eau Claire, you're making it bigger, you're stepping out, but what if you had like a string of pearls that came out across this property? And last summer we went up and we took a swing and found a new discovery at Serendipity. We've got 16 more targets to hit, and we're excited at the prospectivity of this, but it's going to be something at some point, but it's going to take a little time to explore, but we like the upside potential. This is the Eau Claire resource. To give you just a quick snippet of the drilling we've done in the last 3 years. We did a resource update this spring, added 40% to the resource. The market didn't give us much attention, but for us it was really exciting because it put us on a pathway to almost 1.9 million ounces. The cutoff really, the companies are telling us is if you can show a pathway to 2 million ounces, we're interested. And that's why I think we've been signing a lot more CAs and having companies look and sit down with us, because this is getting close and it's open in all directions. It's open to the east, the west. There's a huge gap area in the middle that we have yet to actually poke into. There's a little red spot in the middle that we found gold where they didn't think there would, so we've got to go back. The hinge is on the west side. It definitely keeps going. There's on the eastern extension, there's a block that's 200,000 ounces at 11 grams. We got to go back. But more importantly, we've kind of brought this up forward to a really solid resource, and we should be getting credit in our share price, but we're not. But it will come. When you go up north, just to explain the outline here with Del Mar, I think it's important. A lot of the brokers were talking about this last year, is the transaction ability of this area. You can see Sirius up to the northeast. They've got a couple million ounces at a potential open pit. We've got more discoveries that look like Chichu in the middle, and then this Eleanor South anomaly that's right next to the Eleanor mine. And that anomaly is about 3 kilometers by 2 kilometers. It has the same geochem, structural analysis. It's a golden till anomaly, like I said, with a hinge. And we went back over last summer with a pretty substantial geochem project, and it's given us a lot of highlights. These are sort of the highlights at that geochem project, and we're going to be drilling about 15 holes in a matter of about a week. And we're excited. So we're hoping investors are paying attention, because these are the kind of discoveries that I think every junior wants to have. And we don't know what we have yet, but it could be transformational. Just the last asset to talk about. I know my time gets short here, but we own the 300-kilometer greenstone belt up in Nunavut called Committee Bay. There's been historically $60 million invested by Fury before I got here, another $100 million before that. There's a huge camp, 100-person camp. There's a lot of equipment, a runway, and more importantly, 1.3 million ounces with a potential shear zone that we have yet to test. We've had some producers up here already to take a look. We didn't hear a peep for the first 2 years I was here, but these guys are looking for big property and big swings, like I said in the beginning, and this is potential for that. We get zero credit for that in our share price, and again, it's going to get recognized at some point. And so what we went back up and did some more surveys to target. We would like to go back up. The goal here is to find a joint venture partner. It would be the smarter way to go, and so we're working on that. This is just a quick snippet of Dolly Varden. Hecla owns the property around it. We own 16.25% of the company. Eric Sprott has a big chunk, as well as Hecla, about 15%. They've got $32 million in the bank. They're going to be drilling all this year, so we're excited to keep our shares and move forward with that. And that's really sort of the close. We appreciate you coming.